Hey, what's up, you? Thanks for tuning into the Trade Journals. Got some new content here for you. So, I just wanted to talk a little bit about trends and momentum, and particularly how to identify, when a trend is likely to reverse. And I'm speaking more in the long term here. I'm not. We're looking at the macro scale, not so much the micro scale, like intraday. Well, could be intraday. Anyways, so when we opened up this morning, you can see we tested lower a little bit and then immediately reversed that move and broke up to the high. And then once we hit that high, we couldn't sustain it. So you can see the POC just stayed at the bottom of the range all day long. And you want to be a little bit cautious anytime you have a strong trend, basically, but value doesn't move. The POC is right here, indicating that value is still at the bottom of the range, but we have prices moving a lot higher. So basically, what that's saying is that price is getting ahead of value. Now, in healthy trends, price will lead value. That's totally normal. I don't want you to think that anytime you've got this like divergence like that, that you want to go ahead and be shorting. It's not what I'm trying to say. What I'm trying to say is that either in a strong trend, value is going to move to price, or in a mean reversion play, price is going to revert back to value, which is completely what happened here. We had an excess in the morning, and then we reverted right back to the range, and then we really just chopped around for the rest of the day. You can see we're very much in a range. We peaked outside the range right there, and that was instantly reversed, and then we broke down below the low of the day. But so these are the things that I want you guys to be looking for, though. One, volume is real weak. So you can see we were moving up, but volume is the yellow line. The average is slanted downwards, and a lot of these bars in this area did not exceed that yellow line. So what that's saying is that price is not transacting very well, right? And what does the market do? It brings buyers and sellers together. What is the market's job? In order to create transactions, basically, by bringing buyers and sellers together. If it is not doing a good job at creating those transactions, it is probably, well, due for a correction, just to put it that way. And side note, sorry that I've got my icebergs and then I have my cumulative delta. Sorry they don't go back. I don't run tick replay because it eats up a lot of my processor. So that's why you're not able to see the rest of these charts. Anyways, back on subject. So again, we broke to the upside, was not sustainable. Value stayed at the bottom of the range. Again, we're continuing to move higher. POC jumped up just for a second and then immediately dropped back down again. So that would be a red flag for me. The fact that the POC tried and then reverted, basically. So what I'm seeing is like we keep trying to break higher, but it's not sustaining at all. And if just like right here, if you peak outside of one extreme and there's no continuation, you're generally likely to test the other extreme. And we did. We tested the bottom of the range right here. Longs tried pushing it up again here very briefly, and then we pushed it down again. So, and you can see my zigzag indicator right here, the little up, down, up, down, up, down, shark tooth kind of things. It'll be either green or red, depending on whether or not the volume on the swing exceeded the volume on the previous swing. So you can see there's a lot of that. Like we had good volume here, stronger volume here. And then I can't tell, this one doesn't really look like it's painted for some reason. Yeah, again, it's just all over the place, mixed signals everywhere. But like I said, it didn't really make sense to me until I zoomed out. So let's switch to the 4-hour chart. That's the Russell. Let me get to the ES. Okay, so when we're looking at the 4-hour chart here, one thing you might notice is that we're like right in the middle of the fib, like the ideal fib levels. So right here, so this is 61.8, right at the top of this range actually. Um, so the top of this candle, this pink one that we're on right now, if we move back to the main chart, this is the 61.8 level right here. So that's one clue, right? And if we go back, you can see the volume on this day. So this is like the RTH right here, and then this is going to be the open, I believe. Is it? Where's the open at? Okay, so that's where the open is right there. So this is actually the overnight session in the middle. You can see that the volume today was not even close to yesterday's. Granted, yesterday was a very bullish day, but still, I mean, even if you compare it to the rest of these days, I mean, on these ones it matched up pretty well. But if you start going back further, it's pretty minuscule. So that should be a red flag. Again, volume is your confirmation. If the volume is not transacting very well at these levels, then more likely it's got some testing to do to the other extreme. And then if we go to give me just one second, the daily chart here. Let me switch off RTY. All right. So if we're looking at the daily chart, um, for one, you can see we've got a trend line coming down from the top there, more or less, and we bounced essentially like right where that trend line is. And then again, you can see the volume right here to the left of my crosshair, not transacting very well. So, I mean, these are all things that you could take into consideration when you're kind of developing your bias. I don't know if there's a fib level. There's got to be a fib level in here somewhere from the coronavirus drop. Let's see. Where are we at? Oops, other way. And nope, nope. We're pretty high up there. I mean, we came around, what is that? I can't really read very well with all my with all my levels and everything on there. But yeah, it's close to 80-90% looks like. Anyways, so I mean that's really all I just wanted to mention. Volume is a really great tool for confirmation. Again, particularly when, like I said, the market's one job, its one job to do is to bring buyers and sellers together. And if it's not doing a very good job at that, more likely you're gonna get a test to the other extreme. So, and we certainly did that. And also, let's look at a couple other charts here, real briefly. So, Nasdaq, same thing. Volume just very very weak. Um, you know, and then let's see the Russell, similar. Yeah, Russell had weak volume too. If we look at gold, gold is just pitiful. And you can see it wanted to go and get the overnight high, or at least the high of the day. Um, but it just couldn't break above this level right here. So across many markets right now, if you look at the volume on oil, it's real bad. And you can see that the highest volume we had was on this reversal, where it tried to break above the range and then was immediately reversed. So, like I said, anytime you peak above a key level and it fails, you're usually going to test the other extreme, as we're doing right now. And here, I'll just show you on the longer term chart for CL. So this is literally right here. Oops, wrong one. Bear with me. That's the volume for the RTH. It's just unbelievable. And then here we have the volume for yesterday. the difference there is staggering. 68,000 contracts versus 10,000. Or excuse me, 16,000. So, anyways, that's just one good thing to keep in mind. Also right here we've kind of got a trend line going from that level. You know, so anyways, volume is a really really good confirmation tool. And it is also going to be a precursor to reversals. Anytime volume starts to fade, it denotes slowing or weakness. And if you get it across multiple instruments like that, it's kind of a red flag, at least for me. So moving forward, that will be part of my gameplay. I was trying to get in on the long side this morning on ES, and that did not work so well. And then it was just really, really choppy. Yesterday was a phenomenal day on the ES. It was really, really good. In fact, that was the best day I've ever had trading. But like I said, today, when you get those really, really small swings that are like 5 to 8 points, if you really want to do yourself a favor, calculate the average historical volume for whatever symbols you trade, and take a standard deviation of that, basically. And if you have a move or a day where the volume is like plus one, plus two, minus one, minus two standard deviations, then you know that something is happening or is about to happen, basically, and you want to really be paying close attention. The market moves from expansion to contraction, and today is just a contraction period. We're right at the top of the range. Heck, look at the Russell right here. I mean, it's way up there. So and it's starting to fade. You can see that right there. So anyways, key takeaways: 1, do your homework. 2, use volume as confirmation. If the volume is not transacting very well at those levels, then the market is not doing its job, and it's very possible that it may need to advertise prices either higher or lower in order to bring in more activity, basically. And then, what was the last thing I said? Oh yeah, figure out what the average historical volume is for whatever symbols you trade, and then take a standard deviation for that. There's lots of standard deviation calculators out there. All you have to do is just type in your numbers. So you look at the volume for Monday, Tuesday, Wednesday, Thursday, Friday, or the last month, or whatever you want to do. You just punch those numbers in with commas in between, and then it'll give you the standard deviation, and then you'll know when you are outside of the 60th percentile, or whatever the first standard deviation is. I think it's 68, maybe. I can't remember. And then the second standard deviation is like 90 something. So anytime the volume goes outside of those kind of borders, figures, or whatever, then you know that you are deviating quite a bit from the historical average, and therefore it's something to pay attention to. Anyways, that's it for now. Thanks for tuning in, and I hope you found this information helpful. If you do have any questions, you can find us at www.thetradejournals.us. So thanks so much. Take it easy.